Earnings season is just kicking into high gear, as companies like Amazon, Facebook, and Tesla, they're all reporting their earnings in this very last week of April in the year 2020. In this video today, I'll be breaking down what you need to know about earnings season in a question and answer format so you can get the answers that you need, and this will help you going forward in your investing career. When I was a new investor, there were a lot of questions I had about earnings season. For example, like why do stocks run up before earnings season? Or what if there's a good earnings report and the stock drops? What's the reason behind this all? And how do I take information from earnings season and use it in my investing? So these are all questions that we're going to be answering today in this video. So stick around, there's a lot to cover. Welcome back to The Fire Grind. My name is Daniel, and on this channel we talk about personal finance with a focus on the stock market. And I'm doing this to kind of document my journey to financial independence if I ever get there one day. The goal is I hope to get there, but life is pretty unexpected, just like the whole virus right now. So without further ado, let's talk about earnings season. So what is earnings season? Earnings season is typically a period of around 1 month or so when a lot of companies report their quarterly earnings. And this is basically companies releasing financial statements as well as just updates to their potential investors or current investors about what happened in their business in the previous 3 months. Why are company earnings so important to you as an investor? And here are a few reasons as to why. The first reason is that it gives you an understanding of what business activity has been happening in the past 3 months. And as an investor in a company, you should care about what the company is doing with their money, because at the end of the day, if they do well with their money and they can increase their business activity, then you as an investor are rewarded. So you should really understand what management's thoughts are going into the next quarter, as well as what they have done in the past 3 months. So management will usually talk about accomplishments they've achieved, like different milestones or revenue targets, or even just like big customers they've acquired. And in addition to this, they also give some insight into what they're planning to do in the next 3 months, which is the next quarter, or the next year. Occasionally, there's some larger updates that the company will bring in, like, for example, if a CEO is leaving, or maybe they've acquired a company. So these are all details that are released in earnings reports. The next thing is what management tells you in these earnings reports and earnings calls. This is all true information. And this is key here, because what you hear on the news is actually a lot of speculation by analysts oftentimes. It's only when the company releases official statements, which are fairly rare between quarters, but in every earnings season, during their earnings call, they release a lot of different information about their business, and all this information has to be accurate. Otherwise, the company is liable, and they can be sued for giving misinformation to investors or potential investors. And this has been seen through various CEOs that we've seen, like Elon Musk. He's been sued for various things that he said, but because he has amazing lawyers, he's gotten out of most of it. The next thing you need to know about earnings season and why it's important to you as investors is because stock prices make big moves during earnings seasons typically. And the reason for this is there's a lot of speculators that start to buy into stocks based off of analyst speculations on what they think the company will report. And a lot of day traders will increase their activity during earnings season just because they know they can capture in on different profits as the company's stock price fluctuates a lot more. So as an investor going into earnings season, just be aware that your stock could drop significantly or increase significantly even before any news is released. And this is all because of speculation. The market works on they buy on rumor and sell on news. And the last thing with earnings season is that a lot of analysts release ratings. And these ratings also increase volatility in stocks because traders and investors will look at analyst ratings and make moves based on this. Analysts usually release the revised price targets for stocks and either rate them like an outperform, neutral, or overweight or underperform. And investors take these to heart because this is kind of the best information that they have without a true statement from a company. Some of you who have been in the market long enough or paid attention to earnings seasons might notice that if a company reports stellar earnings, it's possible that they could actually see their stock price fall. And you might be scratching your head as to why this happens. You expect that when a company reports great earnings, their stock price should go up naturally. However, what happens in these stocks typically is that if you look in the prior 2 weeks, the stock price has already run up quite a bit, and this is because investors are expecting the company to report good earnings. And therefore when they do, and they report good earnings but not like super exceptional earnings, then the stock price will fall because once the news is released, there's nothing else that's going to come out later on, so people cash in their profits then. However, there's a rare case that the company will actually kill earnings and supersede what most people thought, and this could send the stock price soaring even higher. If you're still here with me and enjoying this content, please smash the thumbs up button as it really helps the algorithm. And if you're not a subscriber to my channel, and I know about 90% of you aren't who watch my videos, please consider subscribing to my channel and hitting the bell notification so you can get updates on different videos I do. And every time I launch a video, I'm going to be doing a premiere for the video. So in the first half hour of the video, I will be live just chatting with you guys. If you have any questions, you can find me there. As well, I'm on Instagram if you want to check that out. I'm posting my portfolio on there maybe once a week or every couple of days. You can also DM me on there if you have any questions, or if you prefer email, my email's in the description below. You can contact me there with your questions as well. Now back to the video. How many times does earnings seasons occur each year? And if you haven't caught on already, I've been mentioning that companies report their earnings every quarter. So this means they report 4 different times each year. And when do companies typically report? Well, the majority of the reports happen during the month of February, May, August, and November. And right now we're at the end of April, and this is when earnings season is really kicking up because we see like large companies, Amazon, Facebook, and Tesla are some of them that are reporting this week. However, in the following weeks, we know that there's other companies that are reporting, such as Shopify, Square, maybe Costco, and other large companies like that. So how do I know when a company is going to report earnings? And the simple answer is that a company will announce weeks in advance what time and what date they're going to report their earnings. And this can be found on their investor relations sites. If you don't know how to find a company's investor relations page, all you have to do is Google company name plus investor relations. And from there you can navigate and find out when their earnings call is. And how these earnings are released or what time they're released, typically it's either before hours or after hours of the market. And the market opens from 9:30 to 4 o'clock EST. So earnings can occur maybe like 4:30 or 5:30 EST, or beforehand like 8 a.m. or 8:30 a.m. So why do companies not report during the day? And the reason for this is it gives investors time to digest the information that has been just released. There's a lot of information to unpack because there's multiple financial statements, as well as all the information that management releases about their business plans and financial plans. The SEC decided to set these rules and bounds for companies to report earnings before hours or after hours to give investors time to digest the information and not make trades on a split second as they start to hear new information. So the SEC wants you as an investor to listen to the entire earnings report, look over the financial statements, make sure you have enough time to do all this before the markets open the next day or later on that day. This will prevent a lot of irrational activity happening in the market, and this can be very dangerous for new investors or those who are very emotional in their investing. So it's a way to protect investors from becoming very emotional towards their investments. Why do stocks go up and down before the earnings happens? And the reason for this is, as I mentioned before, people buy on rumor and sell on news. So as earnings are approaching, investors get very excited about this. And there's also other people like day traders coming in to take advantage of all the volume and volatility in the stock. So people will buy the stock and sell it in short periods of time. And as well as people are betting on maybe companies are doing poorly in earnings or going to do well in earnings. And the options market is just crazy at this time. Option prices typically go up because this is when there's high volatility in the market and the chances to make money are huge, so options become more expensive. So if you're a gambler, this is really the perfect time for you right now to start putting your money in hopes to maybe double it. But for me personally, I tend not to trade during earnings season just because there's a lot of volatility and I find there's a lot of risk when I'm buying into stocks in the periods before earnings season. I'd rather wait for the news to come out and make a more informed decision on if I want to invest in a company or add to my position on a certain company. What financial statements are released and why are they important to me? So there are 3 main financial statements that are released during an earnings report. This is your balance sheet, your income statement, and your cash flow statement. Your balance sheet gives you an update of the company's assets and liabilities. So assets are things like their equipment, their property, their cash on hand, and liabilities are things like their debt. So maybe they have accounts receivable, or they have long-term loans, or even they have short-term loans. And this will give you an idea of how healthy the company is. If a company has a lot of debt, or they've accumulated a lot of debt in the past 3 months, then as an investor, this might be a red flag to you. So these are a few things that you want to look out for when you're looking through the balance sheet. For the income statement, this is going to show you how much income the company has taken in for the past 3 months. And income is basically like revenue from their sales. Maybe they've got subscription fees, or maybe they collect interest on certain loans. These are all forms of income that you can see on their income statement. Also tells you the costs they incurred in order to produce that income. And these costs could be people's wages, marketing budgets, or even just the cost of the raw materials that they use to build products. The cash flow statement is just a collection of all the inflows and outflows of the cash in the business. This would include rent payments, salaries, income tax they had to pay out, receipt from sales of goods, as well as maybe equity raises. So this is like when a company does a secondary offering of shares on the market. So the cash flow statement is important because if the business has no cash, or they're losing cash each quarter, it doesn't matter how great their income is, because maybe they're mismanaging their cash in other ways and they're using that income that they received and putting it into worthless investments. So you have to pay attention to the cash flow statement, because if a company runs out of cash, they need to find cash some way or another, and that could be in the form of debt. So companies that are continually reporting negative cash flow statements, this is a huge red flag. What happens during a conference call? A conference call is typically about an hour long, where the high executives in the company, the C-suite executives, mainly the CEO and the CFO. The CEO will give you a business update on how the company's doing. So this is just kind of the strategy that he has behind the business, what his plans are going forward, and reflecting on the previous quarter. And the CFO will give a detailed financial update as to how the company's doing in terms of their finances. And after these quick statements are made, it's typically about a 5 to 10 minute period where these statements are made. Then analysts have the opportunity to ask questions. And typically these analysts are from big banks or hedge funds. And they'll ask different questions on the business outlook or the financial statements. And for you as a retail investor, you're able to listen in on these earning calls if you go to the company's investor relations page and figure out how they're broadcasting it. Sometimes it's like a webcast, so there's a link that you can log into it, or companies like Google, they actually do their earnings calls on YouTube, so you can watch it live. If you're not able to attend the earnings calls and you want to hear it, sometimes you can find live recordings of it. However, there's always transcripts that are available, so if you type in the company's name plus transcript for earnings call in Google, you can probably find the latest transcript for the earnings calls. And lastly, we're going to talk about, should we buy stocks during earnings season? And I already alluded to this a little earlier in the video, how I personally tend not to buy stocks during earnings seasons. I have done so in the past. Sometimes I've gotten burned, sometimes I've made money. I haven't quite cracked the code because it's always different every single time. However, if you're planning to invest during earnings season, just do it at your own risk. Know that the stock prices tend to move quite a bit. This could be in the order of 10 to 50% within a couple weeks, depending on the company size, as well as how great or poor their earnings reports are. If you're a person who likes to do swing trading, earnings season is actually quite a great time to start getting into swing trading. Because in the previous 2 to 4 weeks before a company reports earnings, you can make some pretty good swing trades. But here's my tip for you if you want to start getting into swing trading, is that I would personally swing trade the period before earnings. I wouldn't hold my stocks into the earnings date, because typically it's quite uncertain what the stock will do. But if you notice that a stock's starting to pick up during earnings season, maybe a couple weeks before the earnings are released, there's good chances that investors are starting to get into the stock. Day traders and swing traders are starting to build positions in these stocks that they think are going to do well. And you can kind of get an idea if a stock is going to go up based around the news as well as the volume that's being put into the stock. This is where technical indicators are very useful, and in the future I'll do a video on technical indicators and my understandings of them. And if you're watching this at a future date, I'll probably have that video linked right up here so you can check it out. But for now, if you're watching it, as I release it, then you probably won't be able to click that link. So that about concludes what I want to share with you guys about earnings season. Do you have any questions about earnings seasons? Are there any stocks that you're watching this earnings season? Or if you're watching this at a later date, are there any other stocks that you're watching at a later earnings season? I'd love to know what you guys are interested in terms of stocks that you're watching for earnings season. Smash that thumbs up button as it really helps the algorithm to promote my content if you enjoy this video, as well as click the subscribe and the bell notification so you can get updates of when I release new content. On this channel, I'm doing a few series. If you want, you can follow me in them. One of the series I do on this channel is called Invest With Me, and I just launched its first video. You can check it out right here. In this series, I talk about my stock portfolio on WealthSimple. Originally, I was going to show my portfolio every single video. However, it took quite a bit of time, so I'm going to do this once a month portfolio update so that you guys can see what moves I'm making in the market, as well as how I'm tracking my portfolio through spreadsheets and different metrics that I look at. Another series I'm doing is a spotlight on Shopify. So I have a Shopify stock series. If you're interested in that, just click up here. There's a playlist of a couple of videos I've made so far, and look out for the next video that I do. I'm going to be doing a video on Shopify's earnings. It might happen before or after the earnings. I'm not too sure right now. It really depends upon time and what interesting information I can dig up on Shopify. Keep up the grind and have a great day.